Good evening, everybody. It is June 23rd. This video is long overdue. I wanted to create this video, and it's about Elliot Wave theory. And Elliot Wave theory has been a major part of the recent success I've been having. Instead of kind of second guessing myself if I get a fake out from an indicator, it's allowed me to stay in a trade without having to worry about it pulling back. And so I'm going to show you what this is and how it works. So Elliot Wave theory was founded and developed by Ralph Nelson Elliot in the 1930s. Just a quick overview: he was an accountant. He was forced into early retirement, and basically he needed something to keep him occupied. And what he did was he studied the stock market. He would just say, the patterns in the stock market are constantly repeating themselves over and over again. He called these things waves eventually, and he called the patterns fractals that they're based off of. And so this will make sense when you see it, but you can see fractals, it's an infinite pattern that constantly repeats itself. This is the pattern, okay? So you have a 1, 2, 3, 4, and 5, and then you have A, B, and C. And so you're making money in your 1, your 3, and your 5, and then you get a larger corrective wave to the overall pattern. So these are small corrections, so 2 and 4. So 1, 2, a little bit of a pullback, 3, a little bit of a pullback to 4, and then up to 5. So 1, 2, 3, 4, 5, and then larger corrective, a little bit of a bump in between as the market regroups, and it comes down again. When that will just keep repeating. When you look at it, and if you look at this, I don't know if I can make this bigger. Let's see. I can. Incredible. So, whoops, let's make that smaller. Here we go. So you can see here you have 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5. And then you would have the A, the B, and the C. But it also plays out longer. So it goes 1, 2, 3, 4, 5, A, B, C. And so within your charts, like your different time frames, you can see this pattern play out over and over and over again. And as I said, there's books written on this. So there's lots of rules, and I just know I know the basic rules to this. Like what to look for, how much of a pullback, nothing crazy, and you can see them here. These are just guidelines. An Elliott wave can go diagonally, and when it when it changes to a diagonal, how does that kind of read out? So I'm just constantly counting my 1, 2, 3, 4, 5s, A, B, and C, and I look for them to repeat within each other. But basically I'm playing a longer term at a time, so a longer chart. So for example, let's look at Apple today. This is just today's chart. I did two. Here's Apple, and you go, okay, it went up, it pulled back, and typically I'm just watching my MACD and my TTM. And see, this is interesting. When the TTM comes down here, I'm kind of like, oh, it's losing signal, and I'm not really looking to get back in because I'm expecting it to go from, into the purple or into the purple and then back to the green. When you're understanding Elliott Wave, so let's look at the Elliott Wave here. Bang. Okay, so now we have 1, 2, 3, 4, 5. So for example, I'd come up here, I know this is coming, I can see that this is losing a little bit of steam. Okay, you can see that this is slipped away, the bottom of the candle slipped away from the 9. I know there's going to be a pullback. So when it's away from my 9 EMA, there's my 9 EMA. If you're looking, is the blue. Once it pulls away in this area, I can expect a pullback, and the MACD was actually losing its angle of attack. And so I would have sold in that area when I saw it lose its angle of attack. So probably right around here. As this thing pulls back now, you can see the momentum kicking out. So you have the pullback, which is a 1, 2 pullback. Knowing that it's coming up into its 3 wave, okay, so 1, 2, 3, I know there's like, this is just the beginning. So when I have this pullback, if I'm a little early here, a lot of the times I'm not worried and I'll just ride it right out if I buy it a touch too early. So knowing that this is coming as well, I kind of buy it sometimes in the red here, knowing that I'm going to get my 3rd wave coming. It's not just going to fall into the wrong correction if I don't know where I am. So you have 1, 2, 3, 4, 5. A, B, C. And that was this is the major correction to the major move. These are just small corrections within your 1 to 5. So you're making money within 1, 3, and 5. Okay? Now, if we go through the rest of the day, this thing just keeps repeating itself. There it is. So if you look here, you have 1, 2, 3, 4, 5. And then we have A, B, C. Now in terms of fractals and patterns repeating themselves, you can see again 1, 2, 3, 4, 5, and you could have had A, let's zoom in, A, B, C, 1, 2, 3, 4, 5, A in the yellow, B, C. And it just repeats and repeats and repeats. So after I'm at the bottom of my C wave, you know, I know that if I realize that I'm starting another run, I'm a lot more confident. So the earlier I can spot that I'm in 1, sometimes it's later in that move that I spot that I'm in wave 1. I'm excited because I get to play the 3 and the 5 before this thing's going to have a larger correction. So big thing to look out for there. Once you start noticing it, you just have way more confidence in the trade and when to be in the trade and when to completely be out. So these consolidation phases, I normally leave them alone. I find that a lot of times you get a big move in the morning and then it'll come down and chop sideways, and then you get another big Elliott wave at the end of the day. But this was just a great day by Apple. So anyways, that's that chart. Let's look at another one, NVAX. Here's NVAX, you're looking at that and you can kind of see it already. Bang, there it is. So Elliott Wave, 1, 2, 3, 4, 5, A, B, C. Okay? Let's zoom out, let's zoom out, let's zoom out. And you can see this thing repeating itself. So 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, A, B, C, and it just keeps going. And this is what I mean by when it's going sideways and doing that. I don't really want any part of that. But that's how you, if you're in the you know the big uptrend of the day, it's an easy way to know whether you're staying in it. So just look at your charts and take a look. And I would do a little bit more research into Elliott Wave, but it is a no-brainer once you start looking at the charts and you can identify how much longer an uptrend will typically last before there's a corrective phase. So, you know, that's made a big difference for me, and I hope it makes a big difference for you. So anyways, I hope you enjoyed that. I hope it helps out a little bit. Take a look for it. You can implement it in terms of without, you know, just kind of monitoring it, and see if it helps you out. I hope you have a great trading day tomorrow, and thanks for watching.